This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. We are across Bloomberg platforms. It is Tuesday, June 23rd, 2026. Carol Massar, Tim Stenivek, live here at Bloomberg headquarters in New York City. Tim, and we are down.
Yeah, just taking a look at major indexes. The S&P 500 down about 1.2% right now. The NASDAQ composite down 1.8%. We're off our worst levels of the day. But Carol, stocks are tumbling, and check out, that sucks.
Yeah, I'm just pulling it up. The Philadelphia Semiconductor Index on the Bloomberg. You are looking at an index that is down about 8% in today's session. We remind everybody that this has been a group that's been on a tear. It is still up, as we know, Tim, about 90% year to date, but definitely a retrenchment. But having said that, go inside the S&P 500, everybody, and you are seeing most names in that index higher, 310 to be exact, about 193 to the downside. So we are definitely off our worst levels of the session, but it does look like over the last half hour or so, another leg down.
Yeah, and it's really tech driven. As you mentioned, Carol, most names in the S&P 500 are actually higher, but it's the big ones that are lower. And that's certainly what matters for this index. On a points basis, Micron down 12.7%, NVIDIA down 3.3%, Tesla lower to the tune of 5.8%, AMD down 5.8%, Lam Research down 9.4%, SanDisk down 14% today.
Looking at the Mag 7, 4 up, 3 are down. Microsoft up about 1.7%. Amazon up about 0.9%. But as you said, something like a Tesla or NVIDIA really taking it on the chin.
Okay, so that is the backdrop. And certainly on the trade, Ann Bartels is going to be joining us, Chief Investment Strategist over at Sanctuary Wealth. We're talking fundamentals. Are we talking technicals maybe a little bit too?
I love her. That's her backdrop.
We're talking everything.
She's going to amuse us with that, so I'm looking forward to it. We're also tracking President Trump. He's on the ground in Pennsylvania. We know a key state, a pivotal state, one that he won last time around. So we're going to see what he has to say. He seems to be trying to shift what some say is the narrative as of late and get back to the economy.
Well, speaking of narratives, the latest on the AI narrative, Katherine Kostereva over at Creatio is back with us. She's got a private company, I think people would argue pre-IPO at this point.
Yeah.
But just an idea, and she's been in the space for years, an idea of where things are with her.
All right, we're also going to get a read on the U.S. economy and the consumer. We're going to do that with the CEO of the pool manufacturer Latham Group. We're going to get, when we're looking to kind of get a read on what's going on, we look for clues everywhere.
Well, it's the most discretionary of discretionary purchases, right?
A pool?
Yeah, just don't.
Some might say.
Yeah, you got to go back to the Christmas classic, with Chevy Chase, Christmas Vacation, and the bonus for the pool.
Yeah,
That's
bonus.
what it comes down to.
Exactly. All right. First up, though, let's get caught up on the trade on this Tuesday. For that, we're over to Amy Morris. She's in for Charlie Pellet. Amy.
All right. Thank you, Carol. Wall Street got a reality check after a sell-off in the world's largest tech companies fueled concern that the AI intelligence frenzy has powered the bull market and it might be overblown. SpaceX, though, up more than 4%, clawing back some of those losses from earlier today. Tesla, though, down nearly 6% and NVIDIA down more than 3%. Oracle cut 21,000 jobs in the past 12 months. That's more than previously known, including those whose jobs were eliminated by the use of AI. The company's global headcount shrank to 141,000 full-time workers as of the May 31st end of the fiscal year, compared with 162,000 a year before. Those reductions led to about $1.8 billion in restructuring costs. Oracle shares now about 5% lower. On Wall Street, we are off the worst levels of the day. We check those markets for you all day long here at Bloomberg. The S&P 500 down 1.1%, NASDAQ down 1.7%, the Dow up 0.1%, the 10-year Treasury yield at 4.49%, the 2-year yield at 4.18%. Checking crude oil now, WTI crude at $73 a barrel, Brent crude right at $77 a barrel. The Bloomberg Dollar Spot Index is up 0.4%. That's the highest it's been since November. U.S. business activity expanded at its fastest pace in 5 months, bolstered by a surge in demand for manufactured goods. The S&P Global Flash Composite Purchasing Managers Index rose to 52.2 in June. Anything over 50 indicates expansion. Both manufacturers and service providers providers were more optimistic about the future, reflecting hopes of an easing in war-driven cost pressures. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. We go back now to Bloomberg Businessweek Daily with Carol Masser and Tim Stenovec.
All right, Amy Morris, thank you so much. President Trump is on the ground in Pennsylvania today. He's making his way right now through a crowd. We're monitoring the situation. He's visiting a Mack Truck facility to shift attention back to the U.S. economy. So much of what we've been thinking about when it comes to the U.S. and the administration has been the U.S. war in Iran. Those negotiations continue back and forth. But nonetheless, when it comes down to it, what matters when you go to vote, it's the U.S. economy.
Yeah, the visit comes as the president works to put that conflict with Iran and higher gas prices in the rear view ahead of those November midterm elections. I don't know if you noticed, Carol, walking through the streets of New York City today, but it's primary day in New York. And the people who are handing out flyers don't really care where you live as long as you take a flyer.
Yeah, exactly.
I'm like, I don't even live in this district, guys. Stop wasting your paper on me.
I don't even live in this state, folks. So moving on. Hey, we do want to get to what's going on with the president right now. We did mention he is in Pennsylvania. He is looking to kind of put the conflict with Iran and higher gasoline prices in the rearview mirror when it comes to those November midterm elections. I mean, the clock is ticking. We are moving in on it.
Yeah, the president's trip to this facility. It's his fifth visit to Pennsylvania. Of course, it is a key state that helped him win the White House. It's seen as pivotal to Republicans who are holding control or want to hold control of the House.
Yeah, it's a good point. Tracking his moves and his mentions on social media as he is out and about. That is, of course, the president we're talking about. Bloomberg News senior White House correspondent Josh Wingrove. He is in the Bloomberg News Washington, D.C. bureau. Hey, Josh, we're awaiting to see what the president might say, but this is about shifting the narrative, or is this about kicking off the midterms? What is this?
I think they're trying to play catch up a little bit on the domestic travel that they had pledged a few months ago. Really hasn't taken off. I guess you could say that, of course, is understandable given the context of what's going on with Iran. But the president, I guess, is now trying to return to a more traditional stumping schedule. He's going to be in one of the 3 swing districts in Pennsylvania today for this speech. And so, as you know, there's trying to, with redistricting and everything, and the president's appearances, try to squeeze out some sort of narrow House majority in buck history. As you know, traditionally presidents lose the House in the midterms. Pennsylvania's been, flying under the radar a little bit. This is the election year where they do not have a Senate seat open. Governor Shapiro running for re-election in a race that doesn't look particularly close. But so it's really down to those 3 House races that are going to attract a lot of the juice. So we're going to wait to hear from the president. We just heard from him on the tarmac. A bit of a different story than we're seeing for markets. He insists that everything's at an all-time high. So maybe we should just update him a little bit on that. But I think we're going to hear a lot of happy talk about where it goes. We continue to hear different stories, though, from the Iranians and the Americans and other countries, I should add, about where things stand and what is still to be resolved. Basically, a lot is still to be resolved over the next 50-something days.
Well, I want to talk domestic prices, Josh, but that is certainly tied to what's happening in the Middle East. If I look at the Bloomberg terminal for daily national average gasoline prices from AAA, if you go back to the beginning of the year, under $2.80 a gallon. Now at $3.92 a gallon, so pretty much more than $1 still higher, even though that trajectory is moving lower as oil prices go down. Do people in Pennsylvania care what the president says if when they go to the pump, they're paying 50% more at the pump, or 30% more at the pump, I should say?
It's a good question. What we haven't seen is candidates in Pennsylvania or in other places sort of straying from the president or distancing themselves from him. I think that is notable here. Like, in other words, Republicans think that it could be a tough year, but they don't really see any path to re-election if they don't have Trump on their side. But this is the reason that we've seen the president's poll numbers generally and on the economy specifically either at or near all-time lows from both his terms in recent weeks, and that's why they're feeling a lot of the pressure here. We've seen him allude to this in that press conference he gave at the end of his G7 trip, saying, we're only 4 weeks or so away from running out of reserves, and people thought the price of oil would go a lot higher and the stock market would go a lot lower. In other words, kind of laying out a case that makes you think that he was starting to feel the economic pinch of all this. And so we'll see. I mean, we're in the middle, really now, we're heading into the middle of summer travel season where the political bite of gasoline prices tends to be the sharpest. But a lot of analysts will tell you that if it comes down and normalizes by Labor Day or so, that could blunt the impact on the election cycle. We'll see. Remember, Trump is still pushing, as of now, to change the rules in this year's election, right? He's leaning on lawmakers in the Senate in particular to pass the Save America Act, as he calls it, sort of a bundle of voting changes and to tighten voting rules and that sort of thing. Of course, there doesn't seem like there's any appetite for that, but it just goes to show like how much of this seems to still be a live ball right now, not only on redistricting, but by his calls to change the rules fundamentally. We're
talking with Bloomberg's Josh Wingrove. He's there in our D.C. bureau. I misspoke. We haven't seen the president make his way through the crowd yet. Forgive me. Saw the back of someone that looked an awful lot like the president, but it wasn't. But we're going to continue monitoring. He is expected to go up to the podium. Josh, you know how that is. Like behind, like the guys in a suit sometimes look all alike.
We get fooled all the time when the staff helicopter lands. You never know. You never know. You're like, it's not them.
You mentioned political bite. Feeling political bite today is the Office of the Director of National Intelligence. They began some staff reductions today. What do we need to know about this? What did you guys learn?
It's really opaque. Tulsi Gabbard, when she was DNI, started a process of staff reductions to come down from 40% from highs. It's not really clear how far she got. And then, last night and yesterday we reported that Bill Pulte, who's there in an acting capacity for a sort of indeterminate amount of time, has also now started staff reductions of so-called deep state people. We again don't know what that means. We don't know how far Gabbard got. We don't know how far Pulte is going. We don't know whether that includes reassignments of people that might have been detailed to the agency from other agencies, or outright staff reductions, or dismissals, firings, call them what you will. So right now it's really unclear. Remember that Trump has really kind of faced a lot of blowback on the Hill on this Pulte pick, right? And he named a more permanent successor and then pulled the rug on that nomination path. So right now everything is sort of up in the air, but how long a runway Bill Pulte will have at ODNI to try to reshape it and pursue cuts. Of course, he, in his other role as FHFA director, has been a pretty avowed ally of the president, to put it mildly, and certainly using mortgage rules and that kind of thing in that office to pick fights or engage in fights with some of the president's political enemies. So that is why Democrats and some Republicans are having nerves around what Pulte's sort of tenure will be. But right now, we just don't know what how long he's going to be there. We don't know how deep the cuts are going to be. But it looks like they're trying to clear the decks to some extent before he goes back to his other job and the new DNI comes in.
Well, speaking of the other job and a new DNI comes in, what's the DNI that new director of national intelligence finds? Because if we know anything from his day job, we know what he shapes things as. What's the image that the president wants of the agency?
It's a good question. I mean, he demands loyalty, and our colleagues had some great reporting, several months ago that Gabbard had found herself on the outs, right? And that others, including John Ratcliffe, the CIA director, had occupied a space that the DNI had in recent administrations tended to occupy at the president's side, if not day to day, then regularly, very regularly. And so we don't know if the new one, either with Pulte or the permanent pick, will sort of reshake that balance a little bit. I think it remains to be clear. There was that anecdote from that story that I mentioned a few months ago that DNI under Gabbard stood for do not invite. That is not the case with Pulte. He's around the president a lot. And so I think we will continue to see that be the case. But Trump is trying to remake the entire system to stack it with people he trusts and knows. Many, if not all of them, are pretty much unwavering loyalists, and that is a big difference from the first term when you had more give and take in the Trump cabinet, people who were willing to, at least even behind closed doors, sort of go toe-to-toe with each other and debate issues. Right now it's more of about they would say, enacting the president's agenda, and the sort of subtext of that is following orders and not getting a lot of pushback for the president on what he's telling his cabinet and staff to do.
Hey, Josh, last question. When it comes to the National Intelligence Office, what are these job cuts? What impact does it have on kind of the expertise of U.S. intelligence? Does it set us back potentially?
It's a great question, and we just don't know right now. And part of that might be moot because it wasn't clear how much the president was relying on the staff advice there to begin with. And so if you were dismissing those people subsequently when he wasn't listening to them in the first place, if that's the case, then that, I suppose, blunts the impact of this. And so we'll see. Time will tell. But these are the questions that have hung over the nomination process, and why we've had this sort of to and fro on filling the position.
All right, going to leave it there. Hey, Josh, thank you so much. We may be coming back to you, or at least reading your reporting after we hear from the president. Josh Wingrove, he's Bloomberg News senior White House correspondent. And of course, we continue to track the president, who has made his way to Pennsylvania, not yet making his way to the podium there to speak once again at a Mack Truck facility, who he has visited over the years several times when it comes to campaign speeches and rallies, if you will. So we're going to track it and then take you there.
Well, Josh sharing with us that the president said that things were at all-time highs. It's not the case, certainly, for the NASDAQ 100 right now. It's down 3% on the day. It was down as much as 3.4% earlier in the session. Stocks in general are lower, but as you mentioned, Carol, the S&P 500, even though it is down more than 1.1%, the majority of names are higher.
Yeah, so kind of interesting internally. Hey, I'm curious to see what Ann Bartels has to say. She's Chief Investment Strategist at Sanctuary Wealth. They've got about $58 billion in assets on their platform. It's a platform that provides technology, compliance, investment research, and back office services to its 119 partner firms across 33 states. So it sees a lot when it comes to market sentiment and the environment. She joins us right here in New York City on Zoom. Hey, Ann, it is good to have you back with us. You and your team shared some research ahead of you coming on, and some of your thoughts about how Wall Street analysts now expect S&P 500 companies to earn nearly 30% more over the next 4 quarters than they did a year ago. That sharp rise in expected profits giving investors significantly more earnings behind each dollar of stock price. So why are stocks selling off right now?
Well, I think this is primarily a technology sector issue, and really diving into the sector, the semiconductors. We keep a relative price sector model. It's tactical in nature. And the position of the market right now is tech is extraordinarily overbought relative to the rest of the market. In fact, most of the other market is at some level on an oversold basis. So I think tech just is over its skis. Particularly semis. There's leverage in the tech space and in the semis. So I think this is just a correction that we're getting. I don't think this is a major peak. I don't think this is the end of the long-term rally in tech. I do think that we can get quite a correction. And, the correction in semis can be quite painful because the stocks are up so much. So even if you get a 20 or 30% pullback, it'll feel terrible, but some of these stocks are up over 200%.
Yeah, that's a good point. And if you just go back to the March lows, at least of this year, for the stocks, we're still up 90% from that point. So, Ann, how painful could this be? You mentioned 20 to 30% pullback for some of the semiconductor names. What are some other, I don't know, when you look at the technicals, what are some other numbers you could see, and where?
Well, the semis, I think, could be the hardest hit because they've gone vertical. You could get anywhere between 10 to 15% in some of the other names within the tech space. But as you pointed out, is even though the S&P is down, there's a lot of companies up. Banks are doing really well. Biotech is doing really well. So what that tells me is that this is not a mass sell-off of the market where investors don't want to own equities. This is really just a sector rotation correction that we're having within the market.
So is it significant? Like, I like looking at things, either hate or love technicals, but I like looking at relative strength index, the RSI. SOX is still overbought. Mag 7 is oversold as a group. S&P 500, neither overbought or oversold. Same for the NASDAQ 100. Is that an important metric? Or if not, what market signals do you watch and you think, are worth keeping an eye on in terms of where we go next?
You can use RSI. That's very popular. The other indicator you can watch is the stochastic, which gives you overbought and oversold ratings. And it's very clear that most of technology is very overbought. Again, I think this is going to be a very specific type of correction that we have. It's not going to be a broad-based market type of massive sell-off.
Why do you say that?
Because you're seeing sectors rally or industry groups rally, like the banks look good. Small caps, we haven't talked about small caps. Small caps are performing very well. in this tape. Biotech is starting to break out. So I think you're seeing a rotation where they're taking profits in some of the areas of tech that they've made a lot of money. I think another thing that could be happening is, taking profits in front of earnings of Micron tomorrow. Just wanting to lock in some of the gains and waiting to see what Micron has to say.
How does Micron tomorrow make or break the trade?
Well, I mean, if they say anything,
it's down 13% right now.
Yeah, it could still go down another 13% or more.
I mean, it is up 270% this year.
Exactly,
Yeah.
right?
So-
I mean, this is the thing, right? It's had such a run, so it's not like it's coming undone and falling apart. It's just like, let's get real, people.
Yeah, what my Aunt B always taught me, that's Aunt Bernadette, who is a technician. She said, Marianne, we can always retrace 1/3 to 1/2 of any move. So you definitely don't want to retrace a half because that's going to be really painful. But I think you can get 1/3 of a retracement in some of these semi names.
It's interesting too. I was just looking at small caps you mentioned. They're up 20% year to date. S&P 500's up 8% year to date, and the NASDAQ 100's up 16% year to date. Is there more room to run, Marianne, in the small caps? And having said that, should we go further with that and read that as an indication that the U.S. economy is doing well? Because those small caps tend to be much more domestically focused.
I think that's a great point. I think that the answer is yes. It shows that the economy is doing well. The answer is yes. We've been telling people to begin diversifying back into a small cap. We think their bear market of 15 years is over, and that they're in the early stages of their new secular bull market. And for the economy, I love to look at the Bank of America Institute data on their card data, which shows that the consumer so far year to year is spending up 6%. And if you take out gasoline, it's up 5%. Now, maybe part of that is the World Cup spending, but the consumer spending, which gives us another solid piece of evidence that the economy is still very strong.
Why do you think, or how do you think the consumer has remained so resilient amid higher prices, especially for gas?
I think part of it is wages. If you look at wages have been gradually going up, especially in the middle and lower end. So I think that definitely helps. We've all talked about the benefits of the tax bill, but the consumer also has savings, and they have been spending some of their savings. So I think the combination is allowing the consumer to continue to spend.
Should we then read with wage inflation or higher wages that we are going to assume that businesses are going to have to increase costs, or that increases their costs so that they're going to have to push up prices? And so we see that good old wage price spiral. I mean, should we read into that's where we go? Because we've already heard from Kevin Warsh. I mean, out of the gate, first Fed meeting, he talked about the importance of inflation and keeping it in check.
Yeah, and I think that's very key. He talked about price stability. And the market really listened to him. And the part of the market that really told me that they believe him is the break-evens market. Break-even yields completely collapsed, and they're close to actually 2%. I think he's getting the market because you saw the 2-year Treasury yield shoot up on his comments. So he may be getting the market to help him out a little bit. But the market is also starting to price in higher rates based on the dollar. And we're seeing the US dollar start to break out. And so I think this is going to be very interesting because he talks about maybe having a Fed similar to Greenspan. And Greenspan really didn't say very much. And you could actually have people, look at his comments or interpret his comments in completely different ways. And so I think this is going to be very interesting how Warsh is actually going to handle the Fed. And maybe he might have the market do a little bit more of the work for him than what he needs to do.
Yeah, it's funny you say that. Betsy Duke was on with us yesterday, former Federal Reserve governor, former Wells Fargo chair, former chair of the American Bankers Association. And she said, Marianne, that Kevin Warsh's, or excuse me, that the Fed, not Kevin Warsh's Fed, but the Fed in general has communicated too much with investors and with the markets right now. So Yeah, we'll see what happens under Warsh.
No question there.
No question. We'll see what happens. That was it.
No, Marianne.
That was just my brilliant comment for you.
Hey, Marianne, though, before you go, we did want to get you to weigh in on Alan Greenspan. You and I have been talking. We all have been talking with you over the years. What do you think is kind of the lasting impact when it comes to monetary policy and really on financial markets?
You know, he was Fed chair for a good portion of my career because I came into Wall Street in 1985. And he started in 1987. So he really shaped many of us in how we look at markets and how important data is. And that's what Walsh talked about, is that the Fed has to get back to data. And I think that's probably one of the most important legacies that he will leave. And I'll give you a funny statistic. One of his indicators that he used for the economy was the sale of men underwear. So that's one of the funky indicators that he looked at. He really looked at everything. He talked to CEOs. And I think we need to get back to having high frequency data to be able to dictate how the Fed is going to operate.
Okay. I'm not going to lie to you.
That's where we're leaving it. Yes.
The underwear indicator, championed by former Fed Chair Alan Greenspan. I forgot about that. But yeah, I mean, listen, we're going to talk to a guy that's a CEO in the pool industry. Like when we think about the economy, we kind of keep looking for all kinds of indicators to get the most comprehensive read. I'm not saying that's a better indicator than any other, but it's how we kind of do it as well. I feel like sometimes running a hedge fund and just looking for data in as many places as possible. Marianne, always appreciate it. Ann Bartels, she's Chief Investment Strategist at Sanctuary Wealth, joining us right here in New York City.
Let's get to Amy. She's not in New York City. She is down in Washington, D.C. Amy Morris is in for Charlie Pellet with a business news flash. Hey, Amy.
Hey, Tim, a sell-off in tech giants fueled concerns the AI frenzy might be overblown. That led to a bruising sell-off and volatility in global stocks. Market watchers cited a combination of forced liquidation and selling tied to leveraged exchange-traded funds. We do check markets for you all day long here at Bloomberg. S&P 500 down 1.2%. NASDAQ down 1.8%. The Dow is little changed on the upside. The 10-year Treasury yield at 4.49%. The 2-year yield at 4.18%. WTI crude oil now at $73 a barrel. Brent crude at $77 a barrel. Let's check the Bloomberg Dollar Spot Index. It is up 0.4%, highest it's been since November. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Back to Bloomberg Businessweek Daily now with Carol and Tim.
All right, Amy Morris, thank you so much. Amy Morris in for Charlie Pellet. Carol Massar, along with Tim Stanovic, live here at Bloomberg Business. This is what happens. You're reading, you're talking, you're walking, and chewing gum at the same time.
We're here. We're in the studio.
Apparently,
We're in the Bloomberg Businessweek studio. I'm here. Are you here?
I was reading something, and I'm like, maybe I should focus on all of you, which I really want to do. We're also focusing on President Trump in Pennsylvania. As soon as he begins speaking, we're going to take you there.
I've always been talking about, though, U.S. tech stocks losing value today, dragging major indexes lower after sell-off in Korean chip makers, stoked concerns about the sustainability of the AI-driven rally.
All right. So, folks, the drop in the Kospi, this is something that we've had on the Bloomberg overnight, triggering a circuit breaker with SK Hynix and Samsung Electronics each plunging more than 10% following a local media report that said SK Hynix is slowing expansion of AI memory chip production and shifting emphasis to the cheaper commodity DRAM, sparking worries among traders over demand for AI data centers. SK Hynix declined to comment on the report. That has been our global backdrop when it comes to the technology trade and kind of where we are going. Increasingly, we are asking, for more transparency. That's what investors want when it comes to the AI spend, and particularly, we are talking more about return on investment. I think of our Vegas remote that we just did with the team over at Everpure. ROI came up in every conversation.
Yeah, it did. On that, former SEC Chairman Gary Gensler says AI leaders and hyperscalers need to generate meaningful revenue and productivity gains to meet current market conditions. He spoke with Paul Sweeney and Tom Keene on Bloomberg Surveillance on radio and YouTube this morning.
You have to have AI, hyperscalers, and OpenAI be able to build the revenues. Right now, they don't have the revenues. And two, you need to build productivity in the economy enough for the capital markets to overlook all the disruption, all the companies that are going to be disrupting value with a successful AI.
All right, that of course was former SEC Chair Gary Gensler talking earlier on Bloomberg Surveillance with Tom Keene and Paul Sweeney, here with an insider's perspective when it comes to AI. And back with us is Katherine Kostereva. She is CEO and managing partner at Creatio. It's a customer relationship management company. It sells software that automates workflows using no-code and AI tools. She joins us once again from Boston. Katherine, it's good to have you here with us. Remind us again, too, specifically, which lane you guys play in when it comes to the AI build and spend.
Thank you very much for having me, Carol and team. Very nice being here again. So Creatio is an AI and no-code platform, and we have out-of-the-box, best-in-class CRM products built on top of the AI platform. It's an AI native technology, meaning we combine natively human-led workflows and agentic workflows working together in combination.
You've been talking about no code for years. I mean, before we were talking about Claude Code or Codex from OpenAI. I'm just wondering, is there a need for no code right now when you have these tools from the developers of the frontier models that can code for you?
Brilliant. So think about, let's talk a little bit about the platform capabilities today. It's the beautiful combination of code and agents. So you use code and agents inside Creatio to build your applications or workflows. Or if you need to tweak something like drag and drop redesign, you use visual no-code tools. So this is the part of the platform when you can combine both code and agents, AI, and visual no-code tools in one application.
So how does it change the game now that you have the LLM makers have the ability, from my perspective, I think, okay, well, maybe it makes it so, you guys were essentially vibe coding before we were talking about vibe coding. But essentially, the concern is that software companies are taking a hit because people can create their own software as a result of these Claude Code or Codex from OpenAI. Does that affect you?
Okay, sounds great. So let's set up the stage here. So first of all, the vision of the future automation is that organizations will be working 24/7 in very flat organizational structures, thanks to AI agents. And let me uncover that. Let's start with types of workflows that exist today and will exist in the future as well. From one end, we are all used to human-led workflows. Then there are agentic, autonomous workflows that operate completely independently from humans. We call them autonomous workflows, AI autonomous workflows. And then in the middle, these are hybrid workflows, combination of human-led and agentic workflows working together. That's how we see the future. I will give you an example. Some very simple workflows like transactional workflows, when you give a call to a call center, the expectation, your expectation, my expectation in a couple of years from now is going to be, we're going to make a call to any organizations out there, a bank, credit union, retail company, whatever it is. And we expect service 24/7 whenever it's convenient for us. And we can deliver that through AI. This is the future of AI and technology. And this is, by the way, call centers, customer service, customer support are the areas where we see the biggest penetration and the highest ROI. To your question about ROI, that's where ROI comes from.
Katherine, but is that your lane? Because I guess I'm asking because for me, we all already deal with kind of digital call centers, right? But this is kind of amping it up and taking it to a different level. I get that, but it doesn't sound like the major disruptor that requires, companies like, in the Mag 7, whether it's SpaceX or Amazon or Alphabet, like tapping debt and equity markets and raising billions and billions of dollars. And that's part of the trade you have right now today, taking some of the fluff out of the, or taking some of the air out of the AI trade. Is that wrong trade in your view? From what you're seeing, that this still makes sense? Because that sounds to me, I get it, but it doesn't sound as innovative or disruptive.
Does make a lot of Yeah, that's a great question, Carol. It actually does make a lot of sense to me personally. I'll give you the example of our company.
And just got about a minute or so left here.
Yeah, I will go very quickly. So Creatio, for example, is growing around 50% year over year. Revenue, top line grows, very fast growth. We're not budgeting a single additional person in our call center and customer service organization at all for this year. Although the number of clients is growing significantly, we're not growing our employee base at all this year, thanks to AI capabilities. This is a very simple example. So we're all in on AI for us and most importantly for our clients.
30 seconds left here. So does that also mean then you don't have to hire as much? So that's great on the cost side, but there are those labor implications. Or are you hiring in different areas as a result of what you can do with AI? Just quickly.
Yes, absolutely yes. Everything that is human-led workflows, for example, analysts, enterprise sales, architects, that's where we hire.
All right, going to leave it there. Katherine, thank you so much. Katherine is CEO and managing partner at Creatio, joining us from Boston. All right, folks, when we come back, we just got a read on AI. We are going to get a read on supply chains, labor costs, and the U.S. economy with the CEO of Latham Group. And speaking of the economy, that's why the president's in Pennsylvania.
He's in Pennsylvania. We're expecting him to make some comments on a day when, there are lots of primaries happening, including here in New York. We will bring you those comments when he does begin to speak. That's coming up next on Bloomberg Businessweek Daily.
Just about 4 months until those midterms. That's not so far away.
Not far.
It's 2:40 on Wall Street. I'm Amy Morris. SpaceX shares fluctuated at the open after a 3-day sell-off that wiped off more than $600 billion from the company's market value. SpaceX is set to raise $25 billion of bonds in its debut bond offer and is paying a relatively wide premium over treasuries to get that deal done. Almost $90 billion in orders have poured in for the SpaceX bonds, with the greatest demand for the deal's shortest dated tranche, reflecting concerns about SpaceX's cash flow. SpaceX shares now about 3.5% higher. A sell-off in tech giants fueled concern the AI frenzy might be overblown, leading to a decline in global stocks. Investors are guarding against being overly complacent. Sources tell Bloomberg cybersecurity company Varonis Systems is exploring options, including a potential sale after receiving some takeover interest. Miami-based Varonis is reportedly working with advisors as it fields preliminary interest from private equity firms, including Blackstone, Thoma Bravo, and Vista Equity Partners. Varonis shares now 8% higher. We do check markets for you all day long here at Bloomberg. The S&P 500 is down 1.3%. NASDAQ now down 2%. The Dow little changed on the downside. 10-year Treasury yield at 4.49% and the 2-year yield at 4.18%. WTI crude oil at $73 a barrel. Brent crude at $77 a barrel. And the Bloomberg Dollar Spot Index is 4.4% higher. That is the highest since November. U.S. business activity expanded at the fastest pace in 5 months, bolstered by a surge in demand for manufactured goods. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's Bloomberg Business Flash. Let's go back to Bloomberg Businessweek Daily with Carol Masser and Tim Stenovet.
And we will take it. Amy Morris, thank you so much. In for Charlie Pellet. Well, remember yesterday we talked about last week's retail sales data for May that showed that U.S. consumers increased spending in the month across a broad range of retailers despite higher energy gasoline prices. 11 of 13 categories, Tim, posted increases, with motor vehicle sales rebounding by 1.2% and spending at online retailers rising for a 5th straight month.
Yeah, safe to say pools are not in their own category, but I think if Mike McKee were here, he would have some sort of statistic that he could rattle off all about the indicator when it comes to pools. There's certainly something that some consumers spend on, an indicator too of supply chains, materials, and of course, labor costs.
We've got a great guest to talk about this industry. We welcome Sean Gadd. He's president and CEO of the $688 million market cap company, Latham Group. The company's biggest market by revenues by far is the United States, but also sells in Canada, Australia, New Zealand, and elsewhere. He joins us here in studio. Welcome, welcome. Nice to have you here.
Great to be here. Thank you for having me.
Pools, they sound so simplistic. We get what they are, but tell us about your business and the different product lines.
Yeah, absolutely. So Latham is essentially the number one pool manufacturer in the world. We've got scale in both fiberglass and vinyl pools, and we also sell auto covers, which is a safety device that goes over your pool. It protects your investment and also protects the people around the pool and your family.
Biggest area of growth for the company right now, what is it? Not geographically, I mean segment-wise.
Segment-wise, we essentially play, there's two parts in which a pool gets in. If someone moves into a home, empty lot, empty space, they want to put a pool in for recreation. That's the number one market. And then there's a secondary market, which is single-family new construction home builders who are using the pool to help offset the interest rates that they're buying down.
So higher rates.
Yeah, so what they say is they'll come in and they'll say, if the standard mortgage is at 6.5%, 7%, they'll buy it down to 5%, and then they'll put upgrades in. And one of the upgrades they'll put in is a pool.
All right, got it. Talk to us about the types of pools. You guys have something called the Sand State Strategy,
yes.
Which in your earnings call show double-digit sales gains in fiberglass pools in your priority Florida market. I got to tell you, those of us who grew up near pools, with pools, whatever, I remember mostly either cement or liner pools. Tell us about fiberglass. I'm a boater, and fiberglass, man, that is tough stuff.
It is tough stuff. Fiberglass makes up 25% of the U.S. market. It is a growing substrate that goes into pools, so it's been taking share every year.
So it's like a formed entity, and you just drop it in?
Yes, basically you dig a hole and drop it straight in. The advantages over cement, which is less 50% of the market in which we're going after, and that happens to be in the sand states. 50% share, but it takes sort of 90 days to 120 days to put in. For us, once a consumer decides, I want to be in a pool, within 6 days we're in and out.
6 days?
Yes.
6 days.
6 days. So tremendous advantage. And then obviously...
Tim's like, wait a minute, how big is my backyard?
No,
100%. And so the opportunity for Latham, the pool company, is a couple of things. One, we've done very well in the Midwest, Northeast, and Canada, where vinyl is a standard, vinyl liner pools and fiberglass. When you think about the southern states, the majority of the pools that go in are cement. And really it's because they haven't seen an alternative.
But do consumers think about the actual material, or do they say, I want a pool, they call a builder, the builder has the relationship with you, and that's how they get
100%.
that type of material?
A consumer engages, a dealer or a builder comes into their kitchen table, sells a product. Because we're the incumbent, we're still the unknown. So essentially we're a new product in the South. And I say a new product, we've been there for a couple of years, but we are in the new, and we're spending and investing a significant amount of marketing in the southern markets on our Sand State strategies. And when you think Sand State strategies, it's basically Florida to Southern California.
Okay.
But we're taking a very targeted approach on how we get there. So we're looking at neighborhoods. So right now in Florida, we're looking at neighborhoods that have a higher propensity for pools. That is price of pool, price of house, household income, age of home, and size of the lot. Once we get the right neighborhoods, we're working with dealers to go in there and position fiberglass.
Sean, I want to ask you, weather, I think you guys talked about this too on the call, and I think you talked a little bit about some weather maybe, I'm looking for my notes here, but maybe had a little bit of an impact. But I'm just curious, talk to me about weather in general. Cold seasons or the start of like spring cold, can it kill a quarter or a year for you? And at the same time, climate change, where it's getting hotter, perversely, is that kind of a good thing for your business?
Yeah, so one, obviously, we're a cyclical business. Most of the pool building occurs during the spring, summer, autumn months. So it is a cyclical business. Generally, where it's cold is generally our smaller quarter, so it's not going to kill the year.
Yeah.
And when you think about that first quarter, we basically missed equivalent to 1 day of shipping. Okay, so it wasn't by any stretch going to impact us to that degree. What I love about going into the southern states is their season's much longer. And so when you think about where it's freezing cold in Connecticut in March, it's Florida and Texas and Atlanta are ready to go. So as we penetrate further into the southern markets, we'll be able to balance our business in a much more effective way.
What's the typical cost of from soup to nuts for a pool?
Yeah, so the basic pool, when you think about that, the average in across North America is $95,000. But you can get into a pool anything from $70,000, and then of course it can go way up to $200,000 depending the pool you want and what else you do when you put in the pool. If you do landscaping, kitchens, etc.
Why is it so expensive? It's basically dig a hole.
Hey, if it's that easy, Carol, do it yourself.
No, is it the material cost? Is it labor?
It's all of the above. I mean, I think in reality, during COVID, material costs went up, obviously, and hasn't corrected. Labor definitely went up and hasn't corrected. We do a lot of the labor in our factories. This is the advantage of being a fiberglass pool. So
is everything done in the U.S.?
Everything that's supplied to the U.S. is done in the U.S. So fiberglass, because it's quite hard to freight to a house, you need to be close to your market, which is one of our advantages. And so when you think about that, we have control of the costs, we have control of the product, and we have control of the quality. So it gives us a great pool.
Before we leave, just got 40 seconds. We're monitoring the president who is on the ground in Pennsylvania. You seem like the right person to ask, but the Washington Monument reflecting pool, why the heck is there algae? Because anybody who's been around a pool, you throw chlorine, you measure things, you can fix this.
Yeah, 100%. So it is a water chemistry thing. I kind of wish we were asked to put in the pool because fiberglass, again, one of the advantages, it's non-porous, so algae doesn't grow in it.
But is it just they need chemicals?
Predominantly, it needs chemicals.
It's not scratches or things that
It should not be that.
So it should be pretty easy to do.
It's relatively easy, yeah.
Yeah, you just get the chemicals and test the water, right?
There you go. It definitely got to work on water chemistry.
All right, good stuff. Come back soon.
Will do. Love to. Thank you.
Really enjoyed this. Sean Gadd, he's president and CEO of Latham Group, joining us right here in studio. Our eyes, ears, nose, and toes. We are focusing on the president. He is in Pennsylvania, continuing to track his actions and his words. We'll wait until we begin speaking, and we will take you there. You are listening and watching Bloomberg Businessweek Daily. Carol Massar, Tim Stenevik. This is Bloomberg.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenevik on Bloomberg Radio and Television.
All right, everybody, we are getting ready to wrap up the first hour of Bloomberg Businessweek Daily, and we're getting ready for the last hour of trading on this Tuesday. Carol Massar, Tim Stenevik, live here at Bloomberg headquarters in New York City. And Tim, we have seen movements off our lows of the session.
We've seen movements off our lows of the session. The S&P down 1.4, the NASDAQ composite down close to 2.2%. We're also monitoring the president as he makes comments at a Pennsylvania Mack Truck's facility. We'll just bring you any headlines. You can see him right there if you're watching us on TV. We'll bring any headlines as he does make them.
Yeah, I'm just looking at my Bloomberg to see, and so far,
nothing yet.
Not seeing anything. But certainly the midterms, the election process, it is on. Just about 4.5 months to go. It's going to be
But the primary,
interesting.
at least in New York, is today.
That's true, right? And so that's our focus.
You can't walk a block without being, especially in the congressional district that we're in for this office.
I know.
Without being accosted by some sort of campaign worker.
They're just, out there making sure people vote.
Yeah, they are. This is a very competitive district, though.
It is. You're right? And so that's going on.
And a lot of big names are running in this district.
Exactly. Looking at markets, as we said, off their highs and lows of this session, but nonetheless, it's a little bit of a different trade, especially when it comes to tech names. I'm Carol Massar, along with Tim Stenevik. Let's get to some stocks on the move. To do that, Nora Melinda is with us. She is Bloomberg TV markets correspondent, joining us here in studio. And we're going to start with a couple of names that have been on fire this year, but a different tone today.
Certainly seeing a different tone, looking at SanDisk and Micron. Now, these are just some of the chip stocks that we've been having in focus as we've been seeing this broader sell-off in tech today. SanDisk and Micron both down double digits on the day, sitting as the worst performing stocks in the S&P 500. This, of course, coming from the sell-off that we saw in chip stocks in South Korea, that really spilling over into the United States. So you're seeing a really large impact on these two names here as a lot of investors rush for the exits right now.
All right, so ticker SNDK, Micron, of course, MU, which reports earnings on Wednesday. So we're seeing Micron, down about 14%, and SanDisk, we're seeing that name. How low is that one?
Down just about the same, 14%.
Wait, but...
How much are they up?
SanDisk,
yes.
SanDisk is up
perspective.
725% this year.
So basically went nowhere, right?
Up 725% this year. Micron up this year by 265%. So
Just on a tear.
yeah.
I mean, you're still doing really well.
Yes. What's today in the grand scheme of things, right?
I know. But it's interesting, right? A tone, a shift in that, and that certainly gets our attention. All right, talk to us about your next name, FedEx.
So FedEx, also a name that is being tied to earnings. So we are going to get earnings out of FedEx after the closing bell today. The stock, though, slipping ahead of the earnings report. Investors really focused on the company's outlook following a recent spinoff of its freight business. So you're seeing investors pricing in some things as we kind of charge ahead toward the earnings report that we're going to see after the closing bell this afternoon.
Also, just a good, we like watching this company and UPS too.
Transportation.
Yeah, just a good measure of how companies are thinking about the economy, what e-commerce is doing, although so much e-commerce has moved under its own shippers.
Yeah.
But still, FedEx a great measure of that.
Absolutely. When we think about just like the implications for the U.S. economy more broadly, everyone thinks as FedEx and a lot of those other similar companies as barometers for that.
FedEx up almost 40% year to date. You look at transports, Dow Jones Transports, that index is up about 25% year to date.
Wow.
Right. Lee Klasko watching this closely.
I love
Check out his research.
I love all the work he does. All right, from FedEx, where do we go next?
We're going to Best Buy.
Oh,
so
okay.
Can't remember the last time I've been there though.
Well, you used to be able to buy memory at Best Buy. I don't know if I'm sure you still can. So there's a connection
just
between
back in the day.
SanDisk. Yeah.
Ticker BBY on that. Stock is down about 2% right now as we speak, up about 11% year to date. Keeping an eye here because we did see a management change happening. So the CFO stepping down and departing the retailer at the end of July after being at the company for 20 years, including 7 of those years as CFO. So I was looking through some of the Wall Street analyst notes that we like to parse through. And Wedbush actually talked about the fact that they still see Best Buy as a misunderstood special situation that's going through a strategic transformation. And they think that the stock is actually trading at a significant discount to its intrinsic level. But as you can see on the day, Wall Street still selling off on the name, Wedbush leaving that at an outperform rating and assuming coverage of the company.
So this CFO news, but remember, Corey Berry is stepping aside too. She's CEO of Best Buy. That's happening at the end of the third quarter of the year. She's been there forever.
Yeah.
I can't remember the last time I walked into a Best Buy.
This was a hallmark of sort of the mall in the 90s and early 2000s, at least in my childhood.
Oh, absolutely.
Yeah.
And then that's where you used to get your MacBook Pros and everything. Now you just, order on Amazon perhaps?
Yeah, exactly. You never have to leave the house. I'm just going to say. But you should. It's really good. Fresh air, all good stuff.
Touch grass.
Touch some grass.
Put the phone down. Nora, thank you so much. All right, everybody, be sure to check out our Stock Movers podcast. They are 5-minute episodes, pick winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcast.